Uber stock jumps 11% today. And I bet you guys and girls probably want to know why. But in this episode, we're going to do exactly that. We're going to go over why Uber stock has jumped 11% in one day. And then we're going to look at the report they released today. And then we're going to hear from the CEO, courtesy of CNBC. But ladies and gentlemen, if you haven't done so already, go ahead and make sure. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls and children of all ages, you are now tuned into the Investor Show. As always, this is your greatest host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, Uber stock jumped 11%. And as you guys and girls know that I'm a pretty big follower into Uber. I think that it's in a position to dominate a new space. Its longevity, I'm not 100% sure on, but I think I've said this plenty of times. I think Uber today looks like Facebook did back in about 2014. And, you know, the road to profitability, or the path to profitability, is the biggest question for Uber. So, ladies and gentlemen, let's take this look here. As you guys and girls can see on my screen here, you can see today Uber jumped up 11%. You know, it went up down a little smidgen after that, but 11.49% today. It went up $4 today, going up to $44. So that's going to leave a lot of people ask the question, why? Hey, what happened? What's going on? Prince, let me know what's going on. No problem. That's what I'm here for. Let me stop this screen share and let me share my next screen. You please bear with me one second. And voila, here we go. So this is why you go here. This is a Form 8K that was filed today. You can find this on the SEC.gov or the Investor Relations. So right here, they tell you, they released this today. It says, based on the quarter-to-date trends, which included Uber Technology, first months of adjusted EBITDA profitability in the months ending in July 21st and July to August 21st, Uber is updating its Q3 outlook previously provided on the Q2 earnings call. So pretty much they're saying, hey, we're updating our Q3 third quarter outlook. So right here, the company now expects for the third quarter gross bookings between 22.8 billion and 23.2 billion, from 22 billion to 24 billion. So they kind of push their numbers a little bit, slightly smidgen higher, that they're looking at their gross booking. Then they have an adjusted EBITDA between a negative 23 million and 25 million, from better than a loss of 100 million. So they was expecting to lose 100 million in the third quarter, but now they're saying, hey, we're probably only going to lose about 25 million to a positive, to a profit of 25 million is what they're putting in now. With strong improvements in both mobility and adjusted EBITDA. Had to get that out. So here you go. Additionally, for fourth quarter 2021, Uber now expects its delivered adjusted EBITDA to be between $0 and $100 million. So right here, ladies and gentlemen, this is the sweet spot. The sweet spot they're reporting here is on the fourth quarter. I got it up here. Let me drum this up. Y'all give me 1 second. I thought I had it up here. Did it not save for me? So here in the third quarter, they're saying that, hey, we're looking to break even or to turn profitable. More importantly, they're saying in the fourth quarter, they're expecting to see somewhere between $0 to $100 million in profit, right? So they're looking to be profitable by the fourth quarter now. They're looking at hey, you know what? We might be profitable in the third quarter. They've been tracking to be profitable by the end of this year to the beginning of next year. So now they're saying, hey, you know what? We might be breaking even, or not, if not profitable, by next quarter. That is huge, right? Very huge for them. So I thought I had put in here, but that's their third quarter, fourth quarter. That's why you're seeing a jump there. So now the CEO of Uber, Mr. K, I can't even say his last name there, he has something to say. So I'm going to play what he says. He's going to speak about the price surges and things like that. Let me see what y'all say in the comments before I play Mr. Duran. Now Powers, how's it going? She says, hey, Prince, how's it going? Now Powers. I gotta get my sound effects right, man. I'm hitting the wrong button. Al, what's going on, Al? Glad to see you in here. Max B said, what do you think about their investments in, I forgot, that's the Chinese data? Apparently it's looking pretty good. I'm going to see whatever they're doing looking pretty good right now, but I'm going to see what it looks like on their Q3 earnings. So let's hear from the CEO, okay? Here we go.
Amazing how the world changes, but I think the really great thing about Uber is the flexibility of the model. And actually, here we stay, here we are, still in somewhat of a pandemic, and our gross bookings levels are 35 to 40% above the IPO. And we are very clearly on the path to profitability. So super proud of the team for what they've accomplished, but we got a lot of work ahead of us.
But explain what's happened here, because obviously this is ahead of plan, or at least ahead of plan after plan.
Yes.
Given what's happened in the world.
Well, what we did was early on, we identified our need to bring on more drivers to the platform. So in the second quarter, we really leaned into supply, especially in the United States, to reinvigorate our driver base and grow our driver base in the US. And we're seeing that now, the benefits of that early investment in Q3. The business in terms of volumes, we had our best week ever last week. The service in general, surge levels are coming down. ETAs are at their best levels since the beginning of the years. The service itself is getting better. It's still not where we want it to be. And as a result, margins are coming to what they have been on a historical basis, both on the ride side and on the Eats side. Actually, the core Eats business, we believe in Q3 is going to be close to break even or profitable. And when we have both our rides business performing at really high levels and our Eats business performing, you get to a good place.
How much of a function in terms of that margin is a function right now of surge pricing? You know,
price surges.
During the commercial break before we joined, I joked, not so much though, that, when I get an Uber, I almost have to, mortgage my home because of the surge. And sometimes it's extraordinary.
Now he's talking about a surge, they're talking about the price. So hear what the CEO had said.
It's 2-3 times what you think it would normally be. So how much of that is representative of the margin, and what happens over time when hopefully you get back to a normalized?
So surge pricing isn't about margin. Surge pricing is about balancing supply and demand.
Right.
When we surge, the driver.
Now, when he says surge prices is not about margin, that means that they're not pushing the price up to make more money. They're saying that, hey, this is due to supply and demand. We have a lot of people that want to catch a ride, not that many people driving, so we push the price up. So that's what he's saying. That he said, hey, we just didn't jack up the prices to become profitable. Here we go.
Typically gets their fair share of the surge. So it's about making sure that in areas where we got more demand than supply, we attract drivers to those areas so that surge pricing goes down. And we're seeing now surge pricing essentially at its lowest level since May and moving down as well. We're not where we want to be. But the margin situation is just much more because supply and demand are much more in balance now. Really, in the past 2 weeks, we've actually signed up 5% more drivers onto the platform. So the flow of drivers onto the platform is quite positive because the earnings opportunities now are pretty extraordinary. You can earn $35 an hour completely flexibly, working whenever, wherever you want. So that's a pretty attractive proposition.
So $35 an hour today, how does that compare to, let's say, 24 months ago? What would a driver have made then?
It depends on where they're driving, but it is elevated. It's probably 20-30% above where it has been historically. And I think it's a real question mark as to what the cost of labor is going to be going forward. I think the good news is that our system is showing that it can adjust one way or the other. It can operate in a high-cost labor market as we are now, and we're delivering best weeks ever. In a lower-cost labor market, prices come down and the system adjusts.
All right. There we have it. That's directly from the CEO of Uber, what he had to say about it. He pretty much said in a nutshell that we added more drivers. We invested into adding more drivers. The price surges is due to supply and demand, that they're adding more drivers. They're making more money and they're more profitable than they've ever been. And, and I look at the gig economy space. And I'm not saying Uber's the greatest company, is going to be around 100 years. I'm looking at that whole entire space. I'm like, hey, you know what? This is something like they could potentially dominate their market. And that's what I'm betting on. And it's the same way that Facebook was. When you look at social media, do you think Facebook is a company I would invest in for 50 years? Probably not, but guess what? They're dominating their space at this time, and I think that's what position that Uber is in. So we're going to see when they would put out their Q3 earnings. We're going to take a look to see if they're going to become profitable or break even by Q3. And if not, if they become close to profitable, you're going to see a surge in the stock. If they become profitable by December, that's going to be a huge thing. When they report their fourth quarter earnings that they actually became profitable, it's going to be huge. So all eyes is on Uber. This is why you've seen that 11% jump. Everybody's saying, oh my God, they're actually about to become profitable. But anyway, ladies and gentlemen, hopefully y'all guys and girls got something out of that. Drop a comment below. Let me know if you think Uber is going to become profitable by Q4 or Q3. Well, until the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe. Y'all already know my name. It's Prince Dykes. I'm the Prince of Investing. This is the Investor Show. Until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace, be safe, I'm out, and thank you.